everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall, and today with me I've got Matthew Jarvis. I almost messed you up for your brother, Steven.
I was going to say, did you forget my name? I'm like, wow, I've done a lot of podcasts. I've messed up a lot of people's names, but.
Well, I always like to read what people have in the bottom, and I'm like, it's Matthew Jarvis, not just
Jarvis.
Jarvis.
Says Jarvis. It just says Jarvis.
Yep. But so I'm a huge fan of yours. Like I read your book and loved it, and I've recommended it to a bunch of our clients because we work with advisors. And I wanted to have Matthew on today to talk about just all things practice management. We're going to have a conversation around some operational issues and things that we both see working for advisors and the firms that they run. But if you're not familiar with him, Matthew has written an amazing book, Deliver Massive Value. He does a lot of coaching and really focuses on helping people build practices that they don't grow to hate, that you can actually enjoy your life and be profitable and be impactful for your clients and run a very efficient practice. So he's a lead advisor at Jarvis Financial, which is an RIA in Seattle, and his team manages $175 million for 150 households and does approximately $2 million of revenue, all while taking 250 free days of time each year, which is amazing. So thanks for coming on.
Oh, Catherine, it's my pleasure to be here. And I feel like I got to kick off this episode by confessing, since you do taxes and bookkeeping for advisors, I have like squeaky clean books, but it's because literally my mother did my books for a lot of years. And so I had incorrectly assumed that every advisor had squeaky clean books. And then later I learned that no, it was just because my mom did the books. Most advisors have like no books. Like their bookkeeping is there money in the bank account? The books are good, which is an enormous tax mess. There's a big compliance mess there. When you're audited, if you ever have to sell your practice either on your terms or someone else's, and you have this like dumpster fire of books, it ain't gonna work, my friends.
Oh yeah, absolutely. Like I had an advisor come in a couple months ago who she was doing over $1 million a year in revenue, and
Great.
I said, okay, can you send me access to your QuickBooks or like your P&L, like so I can look under the hood and see what's going on in here? And she's like, what's P&L? And she didn't have anything. And I was like, but you've been working with the tax professional. And she's like, yeah, they just kind of take stuff that I give them. And I looked back into it and it was like her profit margin was like 70%, which didn't make sense to me based on her cash position.
Yeah.
So I was like, you probably are paying like way too much in taxes because you don't have accurate books and records. And then for her, she was in the position where somebody wanted to acquire her practice, was, saying, oh, we're going to give you this awesome multiple. And I'm like, well, we don't know what your profitability, like when you actually go to do your valuation, we don't know what that number is because you don't have good records. People were stealing from her too. And she didn't realize it, like it just mess. But, yeah, it's a common issue that I see. It's a cobbler's kids kind of situation where it's like advisors know that they need to put an effort on this stuff, but it's not revenue generating. And so it's like not the most pressing fire.
Yeah, not revenue generating. And it's tedious, right? Like a lot of advisors, financial advisors, right, are going to have short attention spans. A lot of times they're more sales and communication oriented. I think they call that ADHD now or something. And so we're not really drawn to that. Like, and that's where I think you've got to hire somebody. Like I've never actually done my own books, right? Like I mentioned, my mom used to do them. My office manager does them now. I have my CPA does an independent verification of those books just to make sure everything's right. But no, my books would be a disaster if I had to do them. I know how to pull a P&L from QuickBooks and I know how to see what expenses are. I don't know how to add things. I don't know how to categorize them. It's just not my strong suit.
It's not worth your time.
I would imagine, it's not worth my time. And I would do it wrong. Like, why? Exactly. Why do it? I don't, by the way, make my paper in the office. Like we still print things and I don't make the paper. I didn't build the computers, right? Don't do your books. Have someone do them.
Yeah, it's funny because like when advisors come into me, that's one of the first big pieces of conversation because like my emphasis is really on tax planning for advisors where it's let's see where you're trying to drive towards, like let's do this efficiently. You're in professional services, you're going to get hit over the head with the taxes. So like let's try to make that, less of a hit over the head. And I can't do anything if I'm working off of spaghetti. Like, it's like, and then also for the advisors, it's like, well, if you don't know what your own profitability is, how do you even know that you're running a good practice? Like, what are your margins? Like, what's your labor efficiency? I have some people, like I had somebody come in the other day who He's running a good practice. Like he's got a good number of households, but I definitely got like bragging energy off of him.
Oh,
And
yeah.
then I was like, well, how many team members do you have? And the ratio was way off. Like he had where I would have expected to hear like 4, he said 10. And I'm like,
what a nightmare.
yeah. And so it's those kinds of situations where with him, it was like, I could tell he doesn't regularly review his financials or compare them against other people or whatever it is. And I think for a lot of advisors, it's like, I wouldn't want anybody to spend time doing the transactional work, because if you only have like 3 hours a month allocated towards that, I want those 3 hours spent in a management function of you're like, okay, this is what my profit was. Am I happy with this? This is what my free cash flow is. Like, how am I going to deploy this? Like, that's what I want your time spent on, not like, I bought an Apple Watch on my business card, but it should have been my personal card, and I don't know how to fix this. And like, do I have to make a payment back like that? Like, you don't want to be spending any time on that. You want to be spending time on like, okay, what's my next strategic hire? When can I afford to pay it? Do it. Those kinds of moves. But yeah, I'm sure
and where am I spending money? Oh yeah, geez. Yeah. But like every quarter, I want to look, what are any subscriptions that we have? What are reoccurring things? Like, oh, I'm still paying $400 a month for this thing that I never use. Let's cancel that. But you're right, looking and saying, how do I record this the redemption of my airline miles on my business card? How do I record that? That's not for me to figure out, right?
No, yeah, absolutely not. So I don't want to monopolize just talking about like the bookkeeping and the tax side of things. What are some things that you've been noticing kind of maybe more recently, especially as we get towards the end of the year, of pieces that you think people don't pay enough attention to when they're running their practices?
Yeah. So you and I were talking about right now just slippage and money being spent without knowing. And a big one for me is where's your time going that you're not accounting for? And an example of that I like to give, and there's all sorts of science, Catherine, that backs this up, that distractions are just devastating, right? People tell me, oh, you know what? I don't notice the ding or the buzz or that little pop-up that says, I don't notice that. No, all of the science says not only you notice it, it probably destroys about an hour of productivity.
Yes.
So every time you get one of those alerts, take a $100 bill out of your wallet and purse and light it on fire.
Yeah.
Which, by the way, is a crime. That's okay. That's your problem to deal with. And that's probably a low ball cost of that ding. Now, there are some alerts that I will pay $100 for. If my 16-year-old daughter calls me, I'll pay $100 for that alert, right?
Yep.
There's no problem. There's like a handful of people that can get a hold of me. No app can ring me. No email can ring me. There's a dozen people that have my direct number. And even those are all on Do Not Disturb all day, because my time's worth a lot more than $100 an alert. $1,000, $5,000, $10,000 an alert. They're not that valuable to me, but people dismiss that. They think, oh, it's nothing. It's everything. It's everything.
Yeah, absolutely. I remember there's a classic example of, say, A through Z as fast as you can, count 1 to 26 as fast as you can. And people could do it in like 10 seconds. And they're like, okay, great. Now do A1, B2, C3. And it ends up taking like 3 minutes. And it's just because of the distraction. It's just because you're not in one place at one time. I'm a huge fan of that. Like, one of the things I actually do pretty early on when I'm working with a client is I calculate what I consider to be their cost of time. And they say, okay, you took in $300,000 last year. You took in $500,000 last year. Let's divide that by 2,000. This is your rough hourly rate. Now, you probably spent a lot of time doing things that were low value activities. You probably spent time doing things that were high value activities. So anything that's like you're considering where you're doing things yourself, if you could pay somebody less than this rate, your probably best bet is to outsource that to somebody else so that you can keep leveraging up the things you're spending your time on those higher value activities. And so like I look at that on a tax planning piece because a lot of the times I'll see advisors like try to pursue things because they think it's going to generate them tax savings, but it's going to cost them like a couple hours. And it's like those couple hours, if you could have closed 2 other clients, what would that be worth to you? Don't chase the tax savings, And so it's a lot of those kinds of maneuvers. But I think for a lot of people, like something that I do, and I actually am overdue to do another one pretty soon here, is doing a time study where just like keeping track for like a week. What am I doing like every hour of the day? And then going back through and seeing like, okay, what's high value here that I get a lot of joy out of? what's low value that I don't, and then finding ways to get that stuff off the plate. Like, can we delete it? Can we delegate it? How do we get rid of this stuff? Because I think especially for advisors, like, and I'm sure you've seen the same thing, when you're going through that progression of growing your practice, it's like the hair, like the plate spinning and the hair on fire, it just gets worse and worse and worse unless you strategically attack it.
Yeah, it really does. Sometimes I like to flip that time audit on its head. And so we'll have advisors do this exercise, and I'll just do round numbers because it makes it easy for our discussion. Let's say an advisor has 100 clients and they're meeting with each client twice a year for an hour. So that's 200 hours. And let's say that they're spending an hour preparing for or following up on that. So what are we at? 400 hours. Let's add 100 hours of miscellaneous. We're up to 500 hours of 2,000. Where did the other 1,500 hours go? Well, I was busy. Well, you weren't busy helping clients. We call that playing office. I know you were busy. I fall into that trap too. But if I look back at my calendar and I say, hey, I only saw 3 clients this week and I was busy all week, that was pretty much all playing office, right?
Yeah. Yes.
And that's an eye-opening exercise.
Yeah, no, that's a really good exercise. I really like that, because I find with a lot of people, it's the same thing. It's those weird little admin things, or those ad hoc things. And it's just getting really neurotic about, I'm only going to do the stuff that's driving the business forward. If that's being in front of clients or training team members or whatever it is, and trying to just offboard the rest of it.
Yeah, I find myself, you gotta be careful with this one, but in the afternoon when I feel my productivity fall off, like when I catch myself doom scrolling LinkedIn, it's like, okay, cool, I might as well just wrap today up.
Yeah.
Like I'm not working, like I'm not getting paid by the hour. So if it's 3 in the afternoon, either I need to get back to work or I might as well just get out of the office. Like if I'm just going to waste time, might as well go home. Might as well, go work on my race car or whatever I'm doing. No sense sitting here.
Yeah, absolutely. I think that's another one that I think a lot of people, especially if you're running your own business for the first time, getting out of that mentality of I got to be clocked in from 9 to 5. It's like, well, actually for me, like I only really have like high energy power, brain power first thing in the morning. And then I have a big slump in the afternoon. And then for some reason at like 6 p.m. I come alive again. And so just restructuring your day to like, no, I really just want to get the most out of myself. Like I love that. And
totally
not just being a slave. Yeah. Just a slight interruption in this conversation. I wanted to bring to your attention 2 things that are important for you to know. So we're always at the mercy of social media algorithms. So if you can subscribe to the show, that would mean a lot to me. Even more to me if you can leave a rating and let me know what you think about it. But we have a new newsletter that's coming out. It's going to be very active in 2025. That is specifically around tax issues that I'm seeing advisors face in their own practices, changes in legislations, and the pieces that I think are critically important for you to stay ahead of as an advisor with the new administration. So nearby, wherever you're interacting with this, will be the link of how to sign up for our newsletter. Also nearby will be the link to my LinkedIn, which is the best way to get in touch with me, learn more about what we're doing for advisors in the tax strategy and compliance work that we do, and also to get access to the various tools and interviews and things that I do, specifically designed to help you improve your practice, improve your own tax situation, etc. So let's get back to the episode, and thanks for tuning in.
There's a great book on that. I think it was called At Your Best. I'll have to find the author's name, but he recommends going through and time blocking your day in red, yellow, and green based on when you're most productive. So Catherine, like you described, like, at this time in the morning, this time, I'm on fire. Cool. That's when I should do like my really cool stuff. I shouldn't waste that time with meetings. I certainly shouldn't be on social media during those times. My red times is probably when I should go to the gym. Because if I'm being honest, like I'm falling asleep at the desk. I should really just go to the gym or go have lunch or do whatever. So be aware of yourself. There's a lot of should in there. Like, well, I should work 8 to 5. Now that's a made up construct. Now you should work really hard and you should do the reps and you got to do the hard stuff. There's nothing says work has to start at 8. If you're a friend of mine, he does his best work from 4 a.m. to 9 a.m. in the morning. I don't know how, I can't even imagine this. So he gets up at 4 a.m., starts working, puts all of his emails on delay send. So they all arrive at like 8:15 to 8:45. So his teams that he works for a big company, they think he's massively productive because every morning they're getting flooded with emails. The reality is he's been up since 4 a.m. He doesn't want people to know that. And then he just is off the rest of the day, right? He just does what's best for him. Yeah,
no, I love that. And it sounds kind of woo-woo, but like you have to listen to your energy. It's like, we are on circadian rhythms, and those are meaningful. I'd love to talk a little bit about emails because that is one that I am like, I've become an absolute email hater.
Terrible. Yeah.
Yeah. And I know for a lot of advisors, that's like that can become like the bane of your existence very quickly, where you're just chasing your tail on your
It's
email.
such a time suck. Yeah. I mean, at one time, right, in the into the 90s when emails was coming out, it was a major productivity enhancer. Some studies show now that we've actually gone backwards. We're actually less productive today because of email than we were before email existed, because there's so much of it. So a couple of things. I'm a huge fan of the software SaneBox, SaneBox, SaneBox. It's like $5 a month or something. It does an incredible job filtering emails. So I'm a huge advocate of that. My other thing, I get 0 email alerts. There's literally nothing that email alerts me. I don't have red circles. I don't have any of that stuff. I typically try to check my email twice a day. My assistant monitors my client email account so that she can see if there's stuff that goes on that she can take care of or that needs my attention. But no, I can't be in there, Catherine. There's so much garbage in there. I'm too easily distracted. And we have to keep in mind, this is even before AI. Billions of dollars. The smartest people in the entire world are working on making your email and your cell phone as addictive as possible. Like the tobacco companies and the drug companies have nothing on the tech companies. And so for me to think like I have willpower stronger than all of the data scientists in the world, no, come on, give me a break.
No, it's funny that you say that, because I actually had a friend of a friend who worked for the government for a while in research labs for this stuff, and then
DARPA,
got hired on to work like not Facebook, but like great companies of those grade. And he was like, yeah, I'm hired. I'm being hired to make this stuff addictive. Like that was his background. And he was like, this is not like tinfoil hat stuff. Like he's like, I've been professionally educated for this purpose, to just make people scroll longer and make people, not able to put the device down. So yeah, I'm 100% with you. Like I have all notifications shut off on my phone, like basically. And sometimes I get people annoyed at me because they're like, I texted you and you don't text me back. And I'm like, well, I'm busy. I'm sorry. Like
you have no obligation to text you back, right? Like I actually last year, I've had the same cell phone number my entire life since cell phones came out. And I turned it into a Google Voice account because too many people had the number. And so I was getting calls and alerts. And so it's a Google Voice account. So my current number that rings to my cell phone, maybe 12 people have it. Yeah. And everything else goes to this Google Voice account. And my assistant monitors it. And if there's something that needs to get taken care of, a text message, a phone call, she'll take care of that and let me know. And it'd be easy to listen to this and be like, wow, geez, Matt's this really snooty guy. Like he can't even check his own phone. And it's just that I value my time so much. And I know myself. I know that I'm so easily distracted. Just the thought of a butterfly going past my window distracts me. And so a text message from my buddy of some meme that he found, that's going to derail me for an hour. I can't give up that time.
Yeah, no. And I think it's a lot of advisors have the same issue. It's so prevalent in my industry too, of just I'm not going to think I'm better than somebody else to like, I don't need an executive assistant. Like I'm a hard worker. And it's like, it's not about that. It's not about that.
It's not. It's only really about being slightly more intentional, because like you're already delegating 99% of your life, right? We joked about this earlier. Like I didn't build the internet, right? I'm not running the electricity for this place. I didn't grow my food. I didn't sew these clothes. I know that's a big surprise. Like I'm already delegating almost everything. I'm just trying to be a tiny bit more intentional. Now, I've had the luxury. I've taken it pretty far. Like this office I'm in, my personal assistant comes here twice a week and stocks the mini fridge so it has the food in it that I want. And on one hand, that feels pretty absurd. On the other hand, I think, well, or I could burn an hour going to the grocery store, wandering around, being distracted by all the items to pick up the wrong thing that goes bad, or it's just part of her job, right?
Yeah.
It's kind of like the bookkeeping. For whatever task you don't enjoy and you're really bad at it, somebody loves that. Like somebody's super good at that, right? And I just need to find that person.
Yeah, absolutely. And then I think really, especially as you scale your practice, like strategically finding which things to offboard off your plate, and something like the financial part of things. Once you find the right person, like that's one of the easiest ones, to start off with. Other things that are like more intimate, like your email, can be more challenging. But I see
email's more challenging. Yeah,
they'll just wait way too long before they start delegating stuff out and getting stuff off their plates. And it really stalls their growth. Like I can really tell the difference between, because I see a lot of practices, like the practices where the lead advisor's like, nope, I have an assistant. They do all the ops stuff. Like I'm not touching any of that. And I see like year over year how much those practices grows versus the people that get the people who, intentionally are like, I'm just going to run a lifestyle practice and I want to stay small, but then they never build the infrastructure underneath them to actually make the practice robust. And so they just spend a ton of time in it, but don't make much progress. And they feel safe in that, even though it doesn't really serve them.
No, and it doesn't serve clients either, by the way, because client, if you say, hey, listen, Mr. and Mrs. Client, I want you to pay me so I can go check the mailbox myself. Like, what the hell? I don't want to pay you to check the mailbox. I want you to pay me to check no. The client's paying you to work for them and to take care of their needs, right? It's insulting to everybody. And it used to be, Catherine, right? It used to be harder to delegate these things because you'd have to hire somebody full time and put them on payroll and manage. There's so many partial services now for bookkeeping or EA services, all this stuff. You can get a fractional person, their contract Peter, so you can fire them at will. Like, I don't know why you wouldn't do it.
Yeah, absolutely. And I know a lot of people are like, oh, well, the security and the compliance, but it's like, there are vendors that have made it through. It's been figured out at this point. What are some of the big mindset blocks that you seem to encounter a lot when you're dealing with some advisor practices of things that hold people back that might be surprising?
Probably a big one is that we're all anchored on however we started in the industry, right? And so fees would be an example of that. Advisors say, hey, listen, I can't charge more than X. Cool. Why not? Well, that's the number. Well, it's not the number. Like, let's use the 1% number for AUM fee.
Yeah.
That number is touted because it's an easy math number. It's not accurate. It's not what people are charging. It's not what people should be charging. It wasn't the 11th commandment that God gave to Moses. Like, it's just a number, right?
Yeah.
Charge more, charge less. Like, don't do something just because you've always done it that way. Same with email, same with your schedule. Like, just because you've done it that way doesn't mean it's the way that you should do it today. And it doesn't mean you were doing it wrong before. Catherine, when we change things for clients, I always give them this analogy. It depends on your demographic, but for my clients, I say, hey, do you remember when the CD player came out? And they'll say, yeah, I remember versus cassette tapes or records, the CD player, it was an amazing invention. And it was in the early 90s. It was incredible. And I'll say, Mr. and Mrs. Client, when was the last time you even saw a CD? Yeah, I don't know, 10 years, 15 years, 20 years, I don't know. The CD player was the best thing there was at the time. Now we have better things. And then we can tie that to whatever, our service schedule, our fee schedule, our office. That was the investments you're using. That was the best thing at that time. There's a new best thing. And part of my job is to make sure that you always have the best thing.
Yep.
And then we make the change.
I love that. I love that. No, and I think for advisors, you really got to think about that for yourself too, of just and then just where you are, because I'm sure you've seen, like, as you scaled your practice, like where you're at when you're at 500K of top line versus where you're at when you're at 1 million. Like, it's a very different, you get out of, you change ball games very quickly, especially in those early years. So I guess for some of the things that you like to think about in your year-end process, like we're recording this the beginning of December, what are some things that you usually work through or think advisors should be thinking through, like kind of in this last month of the year for themselves?
Yeah, I always, in fact, I'm getting ready later this week. We're doing a 3-day business planning session with some of our members. I always want to start with getting really honest about this year. Right. So how many clients did I actually bring on? Now it's easy in a year like this, like the market's up 30-some%. So everybody's up, right?
Everybody's up. Yeah.
Everybody's up. It's easy to paint over it. How many clients did we actually bring on? How much net new revenue did we bring on? How many days did I work? What was, Catherine, to your point, what was my revenue per hour worked, gross and net? Like, I really want to, and I can't spitball these things. I have to pull the actual number from the software so I can be really honest and then compare year over year. So once I know where I'm actually at, then I can start saying, cool, where do I want to be a year from now? So if it's December 31st, 2025, a year from now, what have I done that I'm celebrating?
Yep.
And I work backwards. From there.
Yeah, no, that's really great. That's really great advice. And it's funny, like in the conversations I have with people, I'll ask them questions sometimes like, so what are you doing for top line this year? And they're no idea. And it's like, that's stuff you gotta, we're in November now, or we're in December now. It's like,
come on, know
that. Yeah.
Well, and what's your real top line? Like, we could have a whole fun discussion on this, right? Which is your real top line is how much is being taken from the client's account. So not how much you get paid after the grid or how much after, no.
Yes.
How much money came from the client's account. That is your top line. Maybe not from a tax perspective, definitely not from a tax perspective, but from a business perspective, right? Like if the client's paying, let's use easy math. If they're paying you 1% and they're paying a TAMP 0.5%, then your top line was 1.5 and you already gave up a third of your revenue. Now you might say it's worth that, and it might be. I don't know the services you're receiving, but top line does not start with the grid.
Yes,
it starts with what comes out of the client's account.
No, that's a really good point, because I have a lot of advisors where they miss that nuance and they're like, oh, well, I get 85% of whatever, and they'll say that, and it's like, no. It's really like you have to think about it like you got that full amount, and this is an expense, and then you have to decide, like, was this expense an expense, or was this an expense an investment? And if it's an investment and I'm getting ROI on this expense, perfect, awesome, great. But yeah, I see people do that maneuver too. Because I think with a lot of the firms, like when we were talking about the spillage earlier, they'll look at stuff where it's, they're just leaking money instead of seeing like, oh, each of these expenditures they need to be in the form of like an investment. Like this is either something that's propelling me towards the future or not producing a return for me, and I need to address that. And it's especially hard with labor, because that's the biggest one.
Labor is a tough one.
It's really tough, like labor efficiency and like realizing, oh, this person's not making it happen. That can be really tough, but it's Yeah, and it extrapolates out quickly, right? Which this works for advisors and it works for clients, right? So let's use an example for a client. You have a wealthy client, you're trying to get them to do a backdoor Roth contribution every year. And the client says like, hey, $6,000, $7,000, I don't want to waste my time with that. But if you sit down and say, hey, Catherine, if we take care of this for the next 20 years, great news, our team will do this, you'll have $400,000 of tax-free money in an account. Oh, well, for $400,000, I'll do this. For $6,000, I'm not going to do this, right? Advisors, same thing. Oh, I have $6,000 of expenses that I'm not really dealing with. Cool, that adds up. But the other place it adds up, we're doing a ton of work with advisors exiting, unlocking equity from their practice. Yeah.
You put a 5X on that. So if you say, hey, listen, I got 10K of expenses that I'm not going to worry about, that's 50K of exit value. Now, what you really have is probably 100K or 200K of expenses that are just getting blown away. Now you're talking about $500,000, $1 million. Like for $1 million, if I offered you $1 million, you wouldn't go through your QuickBooks and find expenses that need to be trimmed off? You would. And that's what's at stake.
Yeah, no, absolutely. That's a really great way to frame about it, because I think for a lot of people, they look at it in the year to year instead of seeing what are these behaviors that I'm doing now that's going to really change that exit multiple? And like, if I go to exit in 10 years, what is this actually going to look like? Because I find with a lot of the advisors, they're awesome technicians when it comes to getting the work done for their clients and working through the planning for their clients. But then when it comes to looking at their own self or being a business owner, it's just, they can't see a lot of those pieces and realizing, oh, like I actually have to change a lot of this, or like, oh, I actually need to hire a couple people underneath me so that I have a team, or those kinds of moves. Any other like closing surprises or thoughts that you have for advisors for year end before we talk a little bit about how they can get to know you better?
Yeah, you need someone to call you out on your BS. So the best thing to do with your P&L is to show it to someone else, not your tax preparer, not your accountant, because they look at a lot of them like that's not what they're there for usually. Find another advisor that you like and trust and respect, and let them look at your P&L. Because all of the excuses that I make for myself about where I'm spending money, and they feel totally justified in my mind. If I have to go to Micah, who I do the perfect RA with, and be like, hey, Micah, so I spent my money here. But wait a second, you spent $100,000 on this? This is crap. That's a total waste of money. Oh, you know what? You're right. It is. I just didn't want to deal with it. Yeah. So yeah, we call that financial undressing, and it will next level your mastermind or whatever coaching group you're in. If you financially undress, which you've probably done with no one ever, that will transform your practice.
Yeah, absolutely. And I think the point that you had there, it's like typically when you send that information to accountants, like it's like going to the doctor's office, like we're seeing naked people all day long. It's not, it's very clinical, versus having an actual other practitioner be able to say like, wow, you spend that much on like that team size and like that's where you're at for top line. Like, oh,
well, and it makes sense in that role, right? I don't want my doctor to be like, dude, your numbers are crap. You know, what the hell? I want my doctor or my CPA to be more objective about like, hey, listen, we need to do these things this way. But a coach or a peer group, I need them to call me out and be like, dude, you need to get to the gym more often, or whatever the thing is. You need to raise your fees, or you need to graduate these clients, or you have too many team members, or not enough, or you need someone who kind of smack you in the side of the head.
Yeah, no, that's true. I think a lot of people, it's the complacency is the thing that kills you, you know.
It is.
Yeah, absolutely. So for people who are interested in learning more about kind of how you work with advisors and what you do, where can they get into your world?
Yeah, you can check out theperfectria.com or the Perfect RIA podcast. You can also buy my book, Delivering Massive Value, which is kind of my story about how I went from just really a lousy, terrible practice to a pretty darn good one. And that's available on Amazon or wherever, well, not wherever books are sold. It's available on Amazon. So yeah, and the Perfect RIA podcast.
Yeah, I highly recommend both. I'm a
Thank you.
big fan. And then in particular, you know, if you're not a podcast listener, I've read your book over the summer and absolutely loved it. Like it's extremely actionable, which is not a lot of business books out there. And it's so field specific that I think every advisor should read it, just because it's, even if you don't implement everything, it gives you the context to make that decision about what you're going to do versus, oh, well, we've always done it this way. It's like, maybe how you do it is the way that you want to do it, but at least you need to make a decision about that rather than just roll it forward.
Yeah, I appreciate that. I mean, I wrote the book, this feels cliche to say, but I wrote the book as what I wish somebody would have told me when I started in the industry 20 years ago. Like, I just thought, I'm going to write this. Some of it was just therapeutic. And I thought, well, if I could just get this all off my chest. And then Catherine, like you said, a lot of advisors have said, hey, wait, this is like, I needed to hear this. So it's I didn't hold anything back. It's everything I wish somebody would have told me 20 years ago when I started.
Yeah, no, and it really comes through. So if that's not a shining enough recommendation for everybody listening, like, it's probably the best. And it's not super long. Like, it didn't take me a ton of time to get through, but it actually gave me a lot of things that I implemented in my own practice. So
that's awesome.
Yeah, so it definitely highly recommend that. But I want to thank you again for coming on the show. It was a treat
thanks for
to have
having me. Yeah, thank you so much.
So for those of you listening, I'd love to hear what your thoughts were on the show. And you can always send me a DM on LinkedIn. Links will be around wherever you're interacting with this for how to get in touch with Matthew and the projects that he's working on, and also his fantastic podcast for you to check out. But I want to thank you again for coming on the show. And for those of you listening, this is another episode of the Financial Advisors Want to Know podcast.